welcome everybody. What a wonderful month and an end of quarter we scathed out of here, right, in the markets. Let's take a gander and share with you some of my favorite indicators and what we look at going forward into the month of April and beyond. So first off, here we have a look-see at the S&P 500. You'll notice we did not break out to a new high today in the markets, but what did break out to a new high was the advanced decline. Also, we had an uptick in volume, even my specialized volume indicator right here, which really did an amazing job in our live trading room today on both crude oil and the E-mini S&Ps. We'll get to that in a minute. What I want to share with you is some of the most, I think, powerful setups that you're going to walk away with in tonight's video with what stocks are generating new fresh signals for the end of the month. That's what we're going to get into. Now, it helps me as a trader that if I have a true sense of the overall health of the market, whether it's a bullish or a bearish environment, whether or not I want to trust buy signals. And with a breakout in the advanced decline, that certainly does lead me to believe that there's higher prices to come in the market. Now, when we take a look at any type of market, generally speaking, friends, after you get a big run up in the market, you get this kind of like capitulation, exhaustion rally, real tall range bars, a blow off top they call them, on high volume. It shows that short sellers are tired of selling and all the buyers came in because they felt like they were missing the trade. You know, we just haven't had that type of price action in this market yet. So it does lead me to believe there's more left this rally. Is it immediate? That's another question. But I think from a seasonal perspective, during the month of April, it's not the worst month at all for U.S. equities. Might have some troubles the first week or so going with people paying taxes on April 15th. But that's where there's that saying, sell in May, go away. And nobody ever said it was the 1st of May. So we may have another 6 to 8 weeks of possible upside left out of the market. Now it's our job to figure out where's the strength and where should we be putting our money to work. What focus should we be in? And for that, I want to introduce you to some of my scan results on the chart here. So here's monthly high closed dojis. And as you can see, we ran this on Friday after the market closed. And let's take a gander here real quick. Well, this is we check off the format box. I ran scans in S&P, the NASDAQ, and the NICE. That's an awful lot of stocks, about 5,000 altogether. Out of 5,000 stocks, what generated new, fresh buy signals for the month? In other words, what was downtrending, what was in a downtrend, and what's reversed and generated a new, fresh buy signal? There's a lot of stocks that have already been in a monthly buy signal from February and March coming in. Now I want to see at the end of March what buy signals are on the table for us. So with that, this is what the results. So these are a lot of your Indy is the iShares India 50. Here's the big PPS buy signal on the Indian 50. I don't know if anyone's going to be taking a look at that for a purchase, but as you can see, if you're asking, saying what broke out to new highs, that's a breakout of older highs for sure, correct? All right, next. Let's take a look. Anything else in this list? Well, as I go through, a couple consumer staples. This is Hormel. If you're a single guy, you know that Hormel, best canned chili on the planet. Nothing like having a beer and a Hormel chili with some premium saltine crackers. Maybe melt a little bit of what? The American cheese, Kraft American cheese on the side. Man, you'd be long consumer staples the rest of your life. So what did you want to be like? Maybe long Constellation brand stock, which has Corona, and a little investment in the marijuana field with their CGC investment. That's Canopy Growth. You'd be long Hormel for the chili and Kraft. So we'll get to that in a minute. Anyway, just talking shop. We have Avid Technologies. That's a breakout. That's a tough one right there to buy a breakout from that magnitude. That was a huge move in the last 3 weeks. But here's one that should catch your boat. Apache. In the oil and gas exploration, Apache generated a fresh new buy signal. Let's take a look. It didn't really get a huge, great accumulation of a breakout on the weekly charts, but it did monthly. How does my take on that? My take is that we have now consecutive series of higher lows, higher highs, and finally we closed greater than a prior month's high. So that tells me it opens the door for some upside. We had good volume accumulation, great volume confirmation using the on-balance volume indicator. So my take is we left the day with a sell signal here. So what does that mean? It tells me not to be too quick to buy, that if it seems to be in a trend mode, we might be able to get and pick up some Apache, probably closer to the low 33 mark. And again, it closed here at 34.67. So that would be kind of impressive. And what's nice about this is we can define our stop, our risk factor, underneath the prior month's low. That's not a huge risk. So if we can get a little pullback here, look to pick up some Apache. We have some decent upside. I would say with this type of pattern, probably mid-summer, June, July, I would fully expect Apache to get to at least the midpoint, somewhere in that zone of resistance. Right there in the midpoint, so that's around what, 42? That's a pretty decent risk-reward ratio. Phillips 66 PSXP. Quite frankly, we were long that one, so we took a profit, so I'm not going to chase that all over again. We have exposure with Hess, and we have exposure with Noble Energy already here with our advisory service. Bonds, that's a big surprise for a lot of people, including myself. The bond market TLT broke out, new high. Is it doing, or is it, I guess the question is it capable of having newer highs? And you know, when we take a look at the charts here, we have resistance up here, resistance up there, so maybe a little bit left to it. It did have some decent volume, and that's what's really scratching a lot of fund managers' heads right now, is that the fact that the yield curve's kind of inverted, and bond prices rallied. But you know, I was expecting and hoping to see the great sector rotation, people coming out of bonds, feeling so compelled that the stock market's still offering lots of great opportunities that people would liquidate out of their bonds and get into more equities. And that was not the case. So this is a kind of a quandary. I'd have to tell you, is that volume spectacular? Probably not, so I'm not going to chase the bond market here by any stretch of the imagination. But I just wanted to share what the monthly outlook is and where new fresh buy signals came in. This would tell me that maybe we have a retest up to around 128.5 up to 129 in TLT. So we go on down the list, and some of these names you may not recognize, and some you may. Onconomed is a small dollar stock, had tremendous strong volume on every front, the daily, the weekly. So this is a stock, OMED. It's a kind of what we would consider a penny stock. It certainly has the capability of rising. I would look for maybe a pullback and then continuation. Strong volume on this one, whatever these guys do. They have their stuff together. What's interesting is that in the month of April, biotech does see seasonal strength. So we want to run scans as we get into the first week of April on a daily basis and see if there's more and more buying pressure coming into the biotech. If that's the case, let's look at XBI, which is the S&P 500 Spider Biotech Index. You'd want to look at this as, boy, it already had a buy signal from the prior month. That's what that arrow says. So it did see some follow through. The weekly chart looks pretty good, and the daily did not break out. A daily close greater than, if I may add, a close greater than all of this upside resistance. These are person's pivots. Boy, that would tell me we're got from 92, next stop, possibly 105, 102, right up against those highs. That's, to me, I think a no-brainer. Volume was pretty good. Volume looks excellent. That's the XBI. Now, looking at other names, Compugen, Seagen, this is another one that we have in the pharmaceutical. So what this is sharing with us is we have a lot of small cap biotechs picking up. So we want to see if that trend continues early into next week. Abercrombie and Fitch, ANF, that was on our buy list for this week. as was Ralph Lauren. So retail apparel, there's a lot of names that have populated buys. This one might be off the charts and a little too risky with that breakout, but here's what I really, really like about Abercrombie & Fitch. Rounding bottom, that's the cup, and that's the handle, and you have a cup and handle, and yes, this probably could see 40, 45, especially if we take out 30. So my way of playing this, it had good volume accumulation. You can see this cup and handle, or maybe you want to call it a kind of a triple bottom in here. I would be hopeful of a pullback down around maybe the mid 23 to 25 range in that zone, and hopefully we get a little pullback before we see acceleration to the upside. Abercrombie & Fitch certainly is one that we would be watchful to buy on all daily pullbacks. Next, Yum Brands in the restaurant chain. There's a breakout. So, and we have, you're going to notice here, here's a company called Yoga Works. This is a small cap guy, right? And then here's the one I really wanted to get to that showed up. Amazon. Retailers. Amazon's doing well. So this is one that Amazon generates a fresh, new, tremendously strong buy signal. Why do I say that? Because the volume action is up, the volume's improving, the weekly volume's up, the daily volume's up, the relative strength on the daily basis is outperforming the market. And here's how I would look for this. I would say not to buy 1780, but I would say to buy maybe, hopefully, a pullback between 80 and even money. So somewhere down the middle, if we can get a pullback in the middle. Amazon traditionally has a good month in April anyway, and we got earnings season coming upon us soon. So guess what? I think Amazon's got more than likely some surprise left in it, and I would say 1980, 1950, 2000 would not be unreasonable to expect that in the next 4 to 6 weeks, by the way, especially if they come out with stellar earnings reports. The Gap, another retail apparel. So you're getting the message here that we have a concentration of retail apparel with fresh new buy signals. Remember I told you about Ralph Lauren? There's the buy signal. So we're getting retail apparel in the buy mode on consumer discretionary stocks. Then finally, Google. So we got some of the FANG stocks. You got your Amazon, you got your Google, retail apparel, you got some energy. This is looking like maybe it adds up that there is potential for new highs in the equity markets. So that's what we have there. All right, let's be fair and impartial. What about new freshly sell signals? Double check. Did we run the same sectors? S&P, NASDAQ, nice. Yes, we did. All right. Is this from this month? Let's double check. As of 3/29, yes, it is. So what generated fresh new sell signals? Well, all right, here's one in the retail apparel that's like going out of business to begin with. Chico's Fashion. I'm not sure a lot of people go there, but here's one in the might be a surprise to some. It's Carnival Cruise Lines. And Carnival Cruise Lines, with that negative relative strength reading right here, with those volumes, this tells me that it opens the door for further declines in possibly testing those lows one more time in the month of April. So it's a Carnival Cruise Line. I don't see a lot in that space like Royal Caribbean. Let's take a look at RCL while we're at it, right? So it's like the opposite. It's like Carnival's losing business, Royal Caribbean's gaining the business. So you can see one stock's going down and one's going up. But again, this is not the company I would want to buy right now. Mainly same problem. Relative strength is poor. It's just not going to tie up my capital, and it's not something I would place an option trade. We don't really have a lot of really strong names. You may be familiar with this. Pot company Tilray generated a sell. There's not a lot of history behind it to give really quality information, but the way it looks like from the weakness and relative strength, I would say this one has the potential. They got some gaps to come get filled down in here. I'm not saying it looks like kind of like the Bitcoin scenario, but it sure does look like the explosive upside and then the implosion like a Bitcoin. I think there's other names I have put out. I'm probably more prone to buying Canopy. I'm probably more prone to buying on more relative weakness Kronos, and certainly There's a couple others that we look at like ZYNE. This is one we're stalking in our live trade room. It generated a weekly buy signal but didn't break out. I'm waiting for this stock to do what? I'm waiting for a breakout over those highs. And that's what I would say we'd go with. Right now we had an inside trading one. So in the pot sector, I think we should have exposure for all investors. But right this very minute, we got some sell signals in that space on a few names. Other than that, gang, there wasn't really a lot in the sell mode that's of concentrated big name companies that say stay away from the sector, except for steel. That's U.S. Steel and Zeus. So in the material, I wouldn't say materials do poor in April, but the steel sector might do poorly in April. We want to look at agriculture, fertilizer stocks in the material space. Those do well in the month of April traditionally. All right, let's take a look at some other interesting items here. Now, I know most traders like to be in control and say, I have the control. And you know, you do have the control. You have the control to keep this finger off of that mouse and not enter a trade. But you also have the control to be knowing when you should get into a trade. And that's what we have here, at least in our trade room. We help people improve their lives. Here's why. When you have setups and you come in each and every day in the live trade room and you see a setup like this, first and foremost, this is the one that I really strive to train our community traders with. When we have a big run up in the market, number one, and then you get a sell signal, look at how and when that sell signal came about. Wow, beautiful. Our volume indicator, you will notice the momentum started to move lower as the price started to go up, and then we generated a sell signal. So with that, we had a what? Negative momentum, a negative bearish divergence reading in volume, which made the market vulnerable for decline. And this was a beautiful trade. This is what we look for in our live trading community. It gave the entry, it gave the first profit target, it scaled out a half, it gets short 2 contracts, right here is -2, it covers 1, and then what does it do? It trails the stop and gets out of the second contract, reverses and goes long. Gets out, but look when it went long. Look at this type of momentum of volume reading. You want to go short when the reading is going down. You want to get long when the reading's going up. It went short and it went long. It had a great day. Let's double check. Today on trading 2 contracts, 7 trades, winners and losers combined up $1,000 on 2 small contracts. That's a good day for crude oil. It was real exciting. Now, here's another thing that I want everyone to focus in on. This was kind of a difficult, it was not an easy week. We talked about earlier this week, if the market had actually, you can see my yellow line in the sand, maybe you saw some other videos. If we had closed below that line in the sand, it opened the door for a bigger decline in the S&Ps. It tested it, it tested it, it tested it, it tested it, it never closed. And finally, look what happened here. Ooh, if you get a buy signal, and you have a rise in volume, you want to go long. It almost looks just like that crude oil trade, doesn't it? Guess what? It did go long. We are long. The system is now and was long from Thursday before today's higher open. The S&P Spider 60-minute model did go long. So here's the thing. If you think this market can't go any higher, if the individual breadth analysis isn't enough to maybe get you to stay off the short side, at least if you come in the live trading room and see that the system is long, then you probably don't want to be short unless you're scalping day trades. And for that, we have our 5-minute model. That's what it's for. 5-minute model today in a very choppy, this was I would say a day that could have killed most investors, right? I mean, let's look at this real quick. If you bought the high breakout, you lost money. If you sold the breakdown, bought the high, look at this. The market made a zigzag lower low, then it made a move. I mean, look at these swings. This was enough to ride anyone crazy in an overall market environment. But our Algo system did pretty good, and you'll notice already, because this is exactly what I was referencing. We started off the box this morning. Look at this. Short the market when the volume is going down. Beautiful. Gets out of half the position, trails a stop on the balance. All right, it could have made more money. It went long because the volume was looking better and it quickly got stopped out. Went short because the volume went back down. It went with the trade. Beautiful stuff. Now, right here, right before lunchtime, and this is one of the things that you may have heard me in the room today, we had a little buy here, and we had resistance at this yellow line. I put in that manually. This is a manual line. It's got nothing to do with the algos. I put that line in the sand. I said, we need to close greater than that line, and this thing's going to rock. So here's the story. It gave a few good trades, made some money, and it just didn't do anything because there was no range. But we still ended up with a nice day. Let's take a look. So today up trading a profit factor of 2.5 on the system, and we are up $700 trading 2 contracts in a real choppy market. Most of that was made before lunchtime. So again, you need to be choosy on what you trade, when you trade, and how you trade. And I think that's what this trading community is doing. It's helping traders stay on the right side with the right indicators. And I really would like to see you improve and get what you deserve in the market. So if you are not a member of our community, sign up. If at least you want to just watch the videos for a while and you like what you see, give them a thumbs up. I think that the more we get people empowered to seeing the right way of trade, the better they're going to do. Let's beat those institutions at their own game. And I think you can, especially when you have the right training with the right indicators. Now, we're leaving you with insights what to expect for the month. There's never ever guarantees that the market's going to follow through. But with the breadth of the market that we just shared with you today, and looking at those volumes and putting all that together, it certainly looks like we still have upside in the market. So don't be looking to run out and sell short just yet. And we'll update you in another video. And if you subscribe to our YouTube channel, you'll get that notification automatically. So subscribe and give us a thumbs up if you like what you see. Thanks, everybody.